Okay, so while Bitcoin just hemorrhaged over $500 million in a single day, yes, you heard that right, $566 million gone, Solana and Hedera ETFs are quietly raking in $350 million like nothing's wrong. Either Wall Street knows something we don't, or someone's about to get absolutely wrecked. And honestly, the charts are screaming two completely different stories right now. Stick around because what I'm about to show you might completely change how you view this altcoin ETF narrative. What's up, everyone? Welcome back to the channel. If you're new here, smash that subscribe button and hit the bell icon because we're breaking down the crypto market's wildest moves before everyone else catches on. And if this video helps you dodge a bullet or spot an opportunity, drop a like. It genuinely helps the algorithm push this content to more traders who need to see it. Alright, let's dive into this absolute madness. So, here's the context everyone's missing while they panic watch Bitcoin tumble. Last week, Solana, Litecoin and Hedera Hashgraph ETFs officially launched, and their debut was basically a ghost town. Retail traders were too busy watching Bitcoin crash to 100,000 to even notice these new products hit the market. Classic crypto attention span, right? The entire launch got completely overshadowed by the broader market earthquake. But here's where it gets interesting. According to SoSoValue's latest data, all three of these altcoin ETFs just recorded positive inflows yesterday. Not just tiny flows either, we're talking serious institutional money flooding in while everyone else is running for the exits. Litecoin's Spot ETF pulled in a modest $1.78 million, which honestly isn't setting the world on fire. But Solana? Solana's dual ETF structure from Grayscale and Bitwise just hit $284 million in cumulative inflows. That's nearly $100 million per day combined since launch. And Hedera's not sitting on the sidelines either. The HBAR Spot ETF listed on NASDAQ through Canary Capital secured $68 million in cumulative net flow with 5 consecutive days of positive inflows. 5 days straight of green while Bitcoin's painting the town red. You can't make this stuff up. Now, before you go aping into HBAR and SOL thinking this is free money, let me pump the brakes and show you what's actually happening under the hood. Because the data I'm seeing tells two very different stories, and one of them suggests we might be walking into a trap. According to crypto analyst Rand on Twitter, and the charts back this up, Bitwise's Solana ETF is legitimately taking over Wall Street with 3 straight days of inflows. That's institutional validation in real time. Meanwhile, Bitcoin ETFs just posted their worst outflow in a month. Fidelity's FBTC alone waved goodbye to $356.6 million in a single day on November 4th, according to Farside Investors' balance sheet. And Ethereum? Even worse. ETH ETFs bled $219 million, the ugliest print since October 17th. But here's the twist that's keeping me up at night. BlackRock, the literal Death Star of asset management, led Ethereum's outflows with $111.1 million cashed out yesterday. Yet they didn't touch their Bitcoin position. Not a single Satoshi. When BlackRock sells one and holds the other, that's not random. That's strategic positioning, and it means they're reading the market differently than retail panic sellers. So why are institutions pouring hundreds of millions into Solana and Hedera while dumping the OG coins? Either they're diversifying into higher beta alts for a coming run, or they're setting up liquidity to exit later. And right now, the technical indicators are giving us mixed signals that would confuse even a seasoned trader. Let me break down what the charts are actually screaming at us, starting with Hedera because this one's fascinating. On the daily chart, HBAR's showing a textbook bearish crossover forming between the 100-day and 200-day exponential moving averages. For those who don't live and breathe technical analysis, EMAs smooth out price action to reveal long-term trend direction. When the shorter EMA drops below the longer one, it's basically the market saying momentum's dying, sellers are in control. That setup typically forecasts a correction. Not great news if you're long, right? But, and this is a massive but, there's a bullish divergence forming simultaneously. Between October 23rd and November 4th, HBAR's price made a lower low, but the RSI made a higher low. That's like the market whispering selling pressure's fading, buyers are creeping back in. So, which signal do we trust? Well, according to my analysis, both are valid, and honestly, that's exactly the problem. HBAR's stuck in this push and pull dynamic where short-term buyers are testing strength, while long-term sellers defend resistance. It's like trench warfare on the charts, and, you know, this tug of war has kept HBAR locked in a range between 16 and 20 cents since October 11th. That's 25 days of going absolutely nowhere while the ETF money just piles in. Now here's where the on-chain data gets spicy. The Chaikin Money Flow indicator, which tracks whether smart money is entering or exiting, has been rising since November 3rd, even as HBAR's price dipped. When CMF climbs while price falls, that's whales quietly accumulating during weakness. They're out there buying the dip, while retail traders are doom-scrolling Twitter and selling at a loss. Classic wealth transfer in action, right? Between November 3rd and 5th, as prices tested that 16-cent support, CMF actually strengthened. That means capital is flowing in against the grain. If CMF stays above zero, we could see HBAR push toward 20 cents, the upper boundary of its range. But if whale accumulation slows down, and it always does eventually, we could see a breakdown to 14 cents, which is the next major support level. My take? This is institutional front-running disguised as retail disinterest. Wall Street's quietly building positions in these altcoin ETFs while everyone's distracted by Bitcoin's volatility. Solana pulling nearly $100 million daily tells me they're positioning for the next leg up in altcoin season, but timing is everything here. Here's what most analysts aren't telling you. The divergence between Bitcoin ETF outflows and altcoin ETF inflows isn't just noise, it's a regime change signal. When institutions rotate out of established assets into higher-risk alts, they're either expecting massive upside, or they're providing exit liquidity for insiders. And honestly, the jury's still out. Solana's dual ETF structure from Grayscale and Bitwise is genius from a marketing perspective. It gives investors two entry points with different fee structures, maximizing total addressable market. That $284 million in 3 days isn't luck. It's infrastructure meeting demand. And the fact that it's mostly happening on NYSE while HBAR trades on NASDAQ tells me traditional finance is taking this seriously. But let's talk about what's not being discussed. Hedera's ETF has $68 million in inflows but only about $1.54 million in total value traded. That's a massive discrepancy. It means money's coming in and staying put. No trading activity, no speculation, just long-term positioning. That's actually bullish if you're patient, but it also means there's minimal liquidity if sentiment shifts quickly. The real question is whether this altcoin ETF money represents smart institutional diversification or just desperate attempts to find yield in a risk-off environment. Bitcoin down 5 straight days with massive outflows suggests fear, but Solana and Hedera up 5 straight days suggests greed. And when fear and greed coexist this blatantly, something's about to break. Alright, so where does this leave us? We've got $350 million flooding into Solana and Hedera ETFs, while Bitcoin loses over $500 million in a single day. The technical charts show bullish divergences forming against bearish trend structures. Whales are accumulating while retail sells. And BlackRock's playing four-dimensional chess by holding Bitcoin but dumping Ethereum. My honest assessment? This feels like the early innings of altcoin rotation, but the setup's not confirmed yet. HBAR needs to break and hold above 20 cents on a daily close to confirm bullish momentum. Until then, we're range-bound with equal probability of breaking up or down. Solana's flows are impressive, but we need to see sustained accumulation beyond this initial rush. If you found this breakdown valuable, definitely check out my other videos, and drop a comment below. Are you buying these altcoin ETFs or waiting for confirmation? I read every comment and your insights genuinely help shape future content. Don't forget to subscribe if you haven't already. Quick reminder, nothing in this video is financial advice. Cryptocurrency is extremely volatile and you can lose everything you invest. Always do your own research, never invest more than you can afford to lose, and consult with a licensed financial advisor before making any investment decisions. Stay safe out there.